I turned this 70 USD account to over 500 USD by selling USOIL, then buying with it immediately after I closed the sales. And I will be teaching you guys how to catch these same trades so you can do it as well. By the way, I did this because these two guys had been requesting for me to cover currency pairs for some time now. So make sure to comment and like on this video for feedback. Let's get this video to over 100 likes. So we start our analysis on the weekly chart, and of course here is the 70 USD we started with. Now on the weekly chart we see that price hit the weekly bearish order block, and after it hit the weekly bearish order block it shot down to hit a huge weekly bullish order block, and you can see that price is reacting and it's now preparing to shoot up to the imbalance. But we can see as well that it hit the weekly inner order block, the bullish one. And now when we zoom in to the daily chart or time frame, I want you guys to pay close attention to how price wiped that low. So price sort of did a grab of liquidity. Now it has to shoot up to that imbalance or our point of interest, which is that huge imbalance it created. So that's our sort of bias on the weekly and the daily. Is that simple. Prices to shoot up to fill those imbalance above and then shoot back down to fill the fair value gap below those lows. Now this is on a huge time frame, so yeah, it's sort of gonna occur over a long period of time. Now when we zoom into the 4-hour chart, what we see is what I want us to pay close attention is to how price grabbed liquidity below that low, and before it grabbed liquidity it made a raid or also another liquidity grab. So price was basically rejecting there. So there's been a lot of rejection there, and it went up to wipe above that high. Now before it went up to make that wipe, what it did is it gave us the first sign, which is the change of character, first sign that is going to shoot up, and it respected that 4-hour order block after it returned back down. And after that it shot up and it made a clear break of structure above that main high, which means price has to now continue shooting up. And of course after price breaks structure it has to return back down into the range and then continue the move up. So we can see that price made a liquidity grab below that low, but it did not manage to fill the imbalance. So my guess is price has to shoot back down to completely fill the fair value gap and then shoot up. And after the imbalance or the fair value gap is the 1-hour order block. So that 1-hour order block is our POI or point of interest, where I think price has to hit and then continue the move up. And now we have this plan in our head that price has to shoot down to that to fill that imbalance and hit the 1-hour order block. We have to focus on how price will reach down there, and how it will be doing that is through this candlestick anatomy here, which is price made an immediate rebalance, and after it made the immediate rebalance it went up to wipe there. So it wiped that high, which was high of the day, think so, and it filled that fair value gap. Now the reason I'm saying it filled that fair value gap is on the 30-minute chart it hit the 30-minute order block, and after it hit the 30-minute order block it shot down like aggressively, and you can tell right now that price is now reaching for a low from here. So yeah, what I think price has to do is to reach for that internal sell side liquidity while it does our plan, which is fill the imbalance and then shoot up. So it created a huge imbalance as it shot down to the internal sell side liquidity. So my guess is price has to go back up and fill that fair value in gap and then hit the 15-minute order block. And after it hit the 15-minute order block, we know it's going to be headed for that internal sell side liquidity. So that is our sell to buy plan, and yeah, after it shoots down there, it's going to have to hit that 15-minute bullish order block. So that's our plan. We sell at that 30-minute order block or 15-minute order block, and then we reach for the internal sell side liquidity, grab liquidity below there, or hit the 15-minute bullish order block, and then we buy. So right about now, I was placing my sell limits, and yeah, of course you can tell that I was calculating. I think I had calculated that I was risking about 40 USD. I think I ended about 0.10, and with 0.01 it's about 3 USD. So yeah, about 40 USD on a 70 USD account. Not bad. If I lose, I'll start from a 30 USD again, and I'll keep on trying. So that was my risk. Not good risk management, but it's okay because I want to get the account up, and I wasn't even going that aggressive on this account. It wasn't even this aggressive because I could have went all out, but I wanted it to be a reasonable amount that I would have risked. So yeah, this is me placing the orders, and we're just going to wait and see what price does after some time. Now this is the afterwards, and you can tell price almost hit our stop loss, but yeah, it was an accurate trade. The reason I'm saying it almost hit the stop, yeah, you can see it almost hit the stop loss, and with the idea that in currencies the spread is huge, it was really close to hitting the stop loss, if you guys know what I'm talking about. So yeah, we're about 60 USD, and then this is after some time. Okay.